Hello everybody, welcome to this week's live stream. As usual, just to make sure you can hear me, if you can just, someone can just say the sound's working okay. I think we have cracked the sound problems in recent weeks. So just as a reminder, what we do in this, we do it every Friday at 2:30 UK time. It's a quick catch up about what's been happening for the week so far, and a look ahead to some of the things that are happening next week. Before we get started, let's just go through the risk warning. It's important to remember this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, so the format for today, as usual, we'll just go through some of the events for next week. Then we spend most of the session on our trading platform. So we'll have a catch up with what's been going on in the major markets. So I go through stock market indices, currencies, couple of cryptocurrencies, oil and gold. And then if there's anything you want particularly looking at, if you put it in the chat, in the YouTube chat, I'll cover it. And we spend up to an hour going through all this sort of stuff. Please don't spam the chat. If you want us to have a look at one market, just put it in once. We will get to it. But let's look at the major stuff for next week. There's quite a lot of stuff going on next week. Clearly, inflation is a big topic at the moment. Concerns about what inflation is going to look like at the end of the year. What does it mean for interest rates? It's spooked markets a couple of times. So Tuesday, 13th of July, US inflation data. Could be interesting, could cause some volatility. Then Wednesday, we've got New Zealand interest rate decision, the early hours of the morning, my time. UK inflation data on Wednesday, inflation again. Canadian interest rate on Wednesday. Thursday, we've got Chinese GDP. How well is the Chinese economy doing? And then this time next week on Friday, we've got US retail sales. So quite a lot going on next week. Quick one with the contacts. To find out more about the company, I'm doing this, obviously this is Capital.com, this is our YouTube channel. Go to Capital.com to find out more about us, open an account, download our app, find out more about me and trading stuff during the week and the trading training course I run. Go to davidjonestrading.com. Any questions after this, drop me an email, david.jones@capital.com. On Twitter, you can follow me on at Jones the Markets and follow Capital.com on YouTube, Twitter, and Facebook. Okay, that's it. Right, let's get into it. I think we'll start off today with stock market indices because we saw quite the fall the other day. It doesn't look like quite the fall on this chart, on the daily chart, but if we flip it over to a 5-minute chart, this is the S&P. So you can see that on Wednesday, the market moved out to fresh all-time highs and absolutely fell off a cliff overnight into yesterday's session. And we've seen, I think, a pretty good bounce back since then. We did a video on the Nasdaq yesterday. That's the latest on our YouTube channel, the pre-recorded videos we did. So that is on the channel. And I bought the Nasdaq in the video we did yesterday because even though we had quite a lot of volatility over the last few days, it doesn't change the big trend. I do feel a bit like a stuck record when it comes to talking about stock markets because the trend is up. Up until Wednesday, we'd had, I think, 9 days on the trot of the S&P 500 hitting fresh all-time highs. So, for a market, if a market is hitting fresh all-time highs and gets knocked back, for me, that's a buying opportunity. So here's our trend. On the S&P, I think I'd only start to worry about a deeper sell-off if the S&P slipped below the May lows at 4,035 and the June lows at sort of 4140. So I think we've got a whole band of support there for the S&P. I think it was quite an interesting trade on the S&P when it got knocked back. So this is an hourly candlestick chart, and you can see it just went, straight down for about 6-7 hours. We had a bit of stability yesterday, about an hour ahead of the open, and we saw a recovery during yesterday. It's come back overnight for a bit of weakness, but hasn't taken out that previous low. So for me, I would be expecting the S&P to move out to fresh highs again. I think for now, I think even though we do get these sharp sell-offs occasionally along the way, we continue to see, despite concerns about inflation and everything else, just an appetite for investors to be buyers. Same with the Nasdaq, of course. You have a look at the Nasdaq 100. So if I flip this over to a daily, so again, just on Wednesday, we saw the Nasdaq hit fresh all-time highs, trading up to near 14,900. Sells off fairly sharply, but again, we've seen a recovery. So again, if we go back to the March 2020 lows for the Nasdaq, that trend is still up. I would still be a buyer on dips in the Nasdaq. Still am a buyer on dips. The trade we did in yesterday's video on the Nasdaq is down here somewhere. Where is it? Here we go. So I bought in the video yesterday just below 14,600. The market is just below 14,700 now. Put a stop in at 14,350. To find out more about the reasons behind that, watch yesterday's video that's up on our channel. But that's the Nasdaq. If we bring it over to Europe, have a look at the FTSE. The FTSE, for me, the trend in the FTSE is still up, even though it has fallen out of this trend that it had been in for much of this year. It's had a few looks below that trend line, as you can see. But we've still got higher major lows and higher major highs. So for me, only if the market sort of broke below 6,800 would I worry that this FTSE recovery is truly over. So for me, that trend is still definitely up. If we take a look at the Dax, the German market, it's perhaps it feels a little bit more sideways than other markets over the past month or so. But again, you'd have to say, if we flip this over to an hourly chart, any weakness still looks to be a buying opportunity. We've got lots of, short-term DAX support around 15,300. Longer-term DAX support down at 14,800. So even though it has been fairly flat for the best part of about 5 or 6 weeks now, I think that broader trend for the DAX is still up. And let's take a look at the Nikkei. The Japanese stock market, still in that trend, still in that corrective trend. We've had that in place for ages now. So it's been a really interesting one, the Japanese market. Had a great run at the end of last year, but it cannot shake off this correction that's been in place since the 16th of Feb. So we're nearly 5 months into that now, and the market, it's still in its correction. Can't shake it off. So for me, 29,500 is the level it needs to break to try and show some sort of strength. But really been moving in the opposite direction to the other stock market indices over recent months. Let's take a look at some of the FX markets. I thought dollar yen was interesting. We don't normally look at dollar yen. I do wonder if there's a bit of a buying opportunity in dollar yen. So we've seen this run in the dollar against the yen since, pretty much all this year. So from the lows in January, pushed out in early July, pushed out to its best levels since about March of last year. And it got clobbered yesterday, but for me, I do wonder if that's a buying opportunity, even though it's broken the trend line. If we saw a bit more stability today, I could be quite tempted to think that perhaps we're going to have a push up over the next few days, next few weeks, back to 111.60, that sort of area. So for me, the support to watch will be around 109 from early June. So we'll see how that one works out. But it's quite interesting. It's had a look below the trend line. But for me, just because the trend line breaks doesn't mean that the trend is truly over. It just means we might go up at just a bit of a shorter, a slower rate of knots. So I think dollar yen's a really interesting market to watch next week. See if we get a bit of a recovery in that one. Pound against the dollar. I think I do think the market's going to go higher. But if you looked at the last 4 months, it's pretty sideways, isn't it? Pound against the dollar. But I think what is interesting here is what a big level 136.50-ish has been since March. And just last week, a week ago, it came down within 70 points of that level, and it has sort of held. So I think it is interesting. I think if, for a swing trade to have a look back up around 142, if we are going to see some strength from here and see how it turns out. But it's been fairly directionless over the last 4 months. But if I had to do a trade on the pound against the dollar here, I'd be a buyer rather than a seller. Let's see if it can get a bit more interesting in the weeks ahead. Euro dollar, same sort of thing. I think it's quite interesting, the move we've seen in euro dollar over the last week or so. So we've come back. We had this trend in euro dollar that started in March into May, then really accelerated away, came back near it in late March. And we've come back to the trend line again recently. So for me, even though it's dipped below that trend line, I would still be, again, if I had to do a trade, I'd still be a buyer probably. Be a buyer now. That the closest I'd want my stop, the other side of the lows from this week, but maybe giving it a bit more wiggle room down here somewhere, down below the late March lows, and seeing if it can swing back up towards 122. I suppose for people who like oscillators, we do have what's known as bullish divergence going on. The market, US dollar, has slipped to a low, slipped lower still, but the RSI, the 10-day RSI, made higher lows. I think that's quite interesting. That can be a suggestion that perhaps the weakness is running out of steam. So I think that's an interesting market to watch next week. I do actually have a trade on in euro US dollar in my own account. I think I actually bought it here somewhere a couple of days ago, and it's just moved into profit today. So we'll see. We'll see if you can get a bit of a move on next week and look a bit more interesting. But I think that divergence is perhaps an interesting setup. Gold as well. I think I did say last week I'd be a buyer of gold. Really, I mean, it's interesting, gold, because if we looked at this, the correction from the highs, the August highs last year, all-time highs, for my money, that correction was over when we saw the move in May. We've got this longer-term trend in gold going back to August 2018. I think if you're waiting for $2,000 plus an ounce in gold, you are going to have a bit of a wait, I think, from here. But for me, it came back down. It came to the lows in March, tested them again late March, rallied up. We saw a $240 move off those lows towards 1920, sold off. And for me, in the short to medium term, I'd be looking for a run back up towards 1920 again. That would be my target if I was trading gold. If I was a buyer now, I'd put a stop loss the other side of that most recent low, the late June low, down at 1750, that sort of area. So it's not a bad trade, because your risk is maybe, if you're a buyer now with a stop $60, $70 away, you've got maybe, it's not a brilliant trade, you've got $120 upside. So you've got slightly more potential upside than your risk from here. So perhaps the better trade is to be patient and see if we get some weakness next week. But I do wonder if we have made, a bit of a short to medium term base for gold over the last couple of weeks down here, and we can see a bit more momentum on the upside. Let's see how it works out from here. Silver, of course, the most boring market over the last year, as I often say, because that's silver over the last year, and actually over the last week as well. It looks pretty boring. Actually, it's sold off a bit over the last week, isn't it? But it's trading at the moment where it was about 3 weeks ago. You can see a real lack of volatility in the price of silver. I think I do have an open trade on in silver from the video that we did. So I've got a couple of trades running in silver, actually. I think it's clearly some orders got filled. But it just doesn't. It just struggles to get any momentum. I think I'd probably rather be a buyer than a seller down here. If I had my stop loss, I put my stop loss probably the other side of 25.50. But again, I think if you're waiting for silver to get to $30 plus, you can have a long wait. It's just dull at the moment. If it got knocked back, clearly we had these lows from September and December last year around about 22. So any weakness below 23 looks like a bit of a bargain, but it just cannot hold on to strength above $29. And we're just it's just a dull market, really continues to be silver. Cryptocurrencies, I don't think there's been much change, is there, in the cryptos? Nothing. Again, there's this sideways after the big sell-off. This is Bitcoin. Just pretty sideways now for not quite 2 months. We do have good support 28 to 30,000. If I was doing a trade now, I'd be a buyer now with a stop loss the other side of 28,000. But if we took it back, we do have this trend still in Bitcoin off the March lows last year. That's still intact. I think just the market's just a bit shell-shocked after the fact that it more than halved off those highs in mid-April. So a little bit dull. And I think we need a breakout, one way or the other, either down below 28 or up above 40, 41 to try and get some momentum again. But it's just a bit dull at the moment. The same, I think, for Ethereum as well. Similar with that. So again, just it has fallen out of that trend that had been in place since December of last year. Good support at 1,600, big resistance at 3,000 near enough. It's a big range, but no real direction, I don't think, in the medium term for these cryptos. And I do think it's a market that is a little bit punch drunk after the great runs where it all seemed to be free money on the way up and then reverse so sharply on the way back down. I think a lot of people perhaps been caught out by that and are maybe licking their wounds. We saw a big move in oil, relatively big move in oil, on the news this week that OPEC and OPEC Plus, the meeting got abandoned because they couldn't come to agreement. So this was the move. So actually, this level up here was very briefly the highest oil had been since October. Was it October 2014? It's definitely 2014. So it was a major high briefly in oil. Got knocked back, so traded up to 76.40 nearly, and lost $6 and a bit more over a couple of days. And so far, I think it's interesting that perhaps it has ended up being an opportunity. I think it will go back and have a look at those old highs. I think plenty of fingers have been burnt by trying to call the turning point in oil, all the way up. But if we went back a year ago when it was down at $10, and here we are, up sevenfold, or in April last year, I should say. So let's see. Well, Brett, someone's just put in the comments, have a look at Brent crude. We'll have a look at Brent crude, but it's going to be the same sort of thing. It's not going to be massively different. We'll have a look at Brent crude in a minute. But for me, for oil, as long as it's above $68 a barrel, that trend is still up, clearly. So I think it's only if we start to lose 68 does it look like finally this trend is over. I mean, it is quite incredible. And clearly, I think if we continue to see ongoing strength in oil, that is going to have a massive impact, you'd have thought, on inflation. And there's Brent crude. It's the same sort of thing again. So Brent crude, I've picked up on the trend from November last year. The knockback in Brent crudes came back to the trend line. We've got so many different pockets of support for these oil markets. For Brent, around $70 is the level, and I think it's only if it starts to slip below there do we see the market under pressure. It would be interesting, I think, if oil did come under some pressure. It'd make for a bit more of an interesting market. But clearly for now, these trends in oil are still up, so it would not surprise me if we saw higher prices again for oil going into the rest of the summer. We'll see. We'll see how it all turns out. So overall, stock market's still strong. They get knocked back and they bounce back again. Currencies, I think some of those currencies could be interesting next week. dollar yen for me, perhaps the more interesting one to watch next week, because it's got knocked out of the trend yesterday, but do we see it claw its way back next week? Silver still boring, gold bit quiet, but perhaps we'll see it push a bit higher, and the crypto's still a bit dull. I think the market is still a little bit punched up at the moment. But let's take a look at some of the markets being suggested and see what people want to have a look at. Yeah, we had a look at Euro US dollar. Someone said, what's your thoughts on a dividend capture strategy? I don't know, because I don't actually know what that is. I presume you're buying before a stock goes ex-dividend. So you're buying the stock, assuming you're going to get the dividend before, and then selling when it goes ex-dividend, and banking on holding on to the dividend and keeping the dividend, and then selling the stock afterwards. But you're speculating the stock isn't going to fall as much as the dividend. I've never done it myself, so I don't know how successful or otherwise that would be. I'd suggest that perhaps a bit of a Google research might help you more there. I suppose in a strong trending market or in a strong trending stock and it pays the dividend, you'd see an adjustment to take into account the fact it's gone ex-dividend, and then you might see the stock bounce back a little bit. So I can sort of see the case for it, but it's not something I've got a lot of experience with, so I'd do a bit more research independently on that, I think. Can we have a look at Argo Blockchain, ARB? Let's have a look. Argo Blockchain. All right, if I can actually type it in correctly. Argo Blockchain. What do they do? Why is it coming up? Argo Blockchain. Oh my God, that looks like a horrible chart. I'm not quite sure what's going on there with that chart. Crypto asset mining services worldwide. Why have I got a bit of a dodgy spike on that chart? Hold on a sec. Let's just tidy that up. I mean, it looks to me, it looks pretty weak, doesn't it? It's gone from in April. Is this in Canadian dollars? Oh no, this is in pounds. This is quoted in pounds here. So it's gone from 240 down to it's halved basically. So for me, it's never an attractive one when it looks like that. It looks pretty thinly traded as well. So I've just flipped this over to an hourly chart. We've got a dodgy bit of data in there. I suppose it would be one that would be of absolutely no interest to me, just to put that out there. But I suppose if you really wanted to be a buyer, being a buyer now, a bit of bottom fishing could be interesting with a stop the other side of one. I'm not sure if that's 1 penny or £1, whatever it is. But I suppose that could be the strategy for that one if you really wanted to be a buyer now. And if it slipped below 1, I'd bail out. But for me, those sort of things aren't of much interest to me because it looks pretty illiquid. But whatever you decide to do, good look with it. What's the spread like? The spread's not too bad, I suppose. But yeah, there you go on that one. It'd be interesting to come back to it and see if that one level has held. Can we have a look at TAL Education, TAL? I think we looked at these before, didn't we? I remember looking at these. TAL Education. What do they do again? Leading education and technology enterprise in China, which maintains the core development goals of blah 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 blah. Okay, let's have a look at that. Let's have a look at the dailies. It looks pretty weak, doesn't it? I mean, if we look at the move from Feb this year, so 90. Is it $90 or is it £90? It doesn't really matter to me. But let's say so it goes from 90 to 20. It was only yesterday that the stock hit its worst level in this down move. So for me, if I was a buyer today, what are the chances I'm going to nail the bottom? It's highly unlikely. So for me, it's still weak. The trend is still down. But let's take this chart out for a bit in a minute. Let's just take a little look backwards. I suppose it is interesting, Danny. I wonder what has happened to see it get hit so bad. I mean, it's traded yesterday to its worst level since 2017. So it's taken out the low from 2018. I think it's an interesting one to say, well, if we are going to see it build a base, perhaps this is an area where we might see a bit more stability come into the stock. So I suppose it's interesting because this was the base down here, around $20.50 was the base if we went back to 2018. For me, I wouldn't be a buyer yet, but I think it's one that's maybe perhaps worth coming back to over the weeks ahead to see if we do see some stability. But for me, that the trend on that one is still pretty much down. Alibaba, I think they hit a multi-year low, didn't they, yesterday? I remember this one because that trend is right on that trend, isn't it? So I remember when we look at this, let me just adjust that trend line. Now that trend line looks okay, doesn't it? So we've got the trend going back to 2016. So that's 5-year trend for this one, and you can see it was sitting on it a couple of days ago, and it's gone bang below it. Now for me, just because the trend line's broken doesn't necessarily mean the trend is over. So for me, it's going to be an interesting one to watch over the next couple of days. If I had to do anything, I'd probably be a buyer. I'd be an aggressive buyer, but I'd rather wait with a stop, perhaps the other side of these May 2020 lows, so maybe down at 186, because it was behaving well here, where it hit its trend line and was bouncing around. But for me, I'd give it one last chance at the trend. But I think it's interesting. I think if it pushes much, I think if we take out 190, 195, it does look like this trend is starting to look like it's over. But because that trend has been in place for 5 years, I'd be willing to give it another go. So it's an interesting one down here. For fans of the RSI, it's pretty oversold. 10-day RSI is really oversold. I mean, they can go oversold and stay oversold if the market's really weak. But it is an interesting one. So I think for a trade, I could be tempted to be a buyer with a fairly tight stop. But let's see what happens. Sterling New Zealand dollar. Let's have a look at that. We haven't looked at that one, have we? GBP New Zealand. Let's have a look. Let's take it out a bit. I think it's a tricky one, isn't it? I mean, on the one hand, I would say that since January of this year, the trend has been up. So it looks maybe something like that. On the other hand, it's really struggled since March of this year, holding much above 198, hasn't it? So I think there's a few things here. I think there's a couple of things here we could do. I think if we start with the daily chart, I wouldn't want to do anything yet. But if it got knocked back next week to 196-ish, I'd think about being a buyer with a stop under 195. So that would be like more of a swing trade. And I suppose from an aggressive short-term trade, we could take the view that perhaps we're going to see it run out of steam ahead of those June highs, 199.50 to 2. So for me, I could be tempted to be a seller into strength if we saw much strength up here. And if you got knocked back next week, be a buyer. But I just think it's a bit that trend since actually December last year is up, isn't it? So I could be tempted to be a buyer, but be a buyer on a dip rather be a buyer on where it is now. But I suppose this is proving to be a bit of a barrier, sort of 198 to 2, isn't it? So let's see what happens. But I'd rather buy on weakness, I think is what I'm trying to say. Difficult one, that, for me. BT Group, let's have a look at BT Group. So the UK telecoms company. I'm guessing they're still a great dividend payer. I don't think it's been a brilliant performer over the years. And we don't seem to have that much data on BT. Have I got the right BT there? BT.A. BT Group. Yeah, that is the one. Let me just hold on a second. Let me just bring it over and have a look at the really long term on my other charting platform. Just hold on a sec. Because I think they've been, here we go, let's bring that up. So we've got loads of data. I think it's interesting. Here, I mean, you can see, this is something I look at when I'm looking at just that longer term investments. I think the break that we saw, actually, it started at the end of last year and it's continued this year, has been the break of that long-term downtrend in BT from March 2016. So it broke out of a 4-year plus downtrend. So for me, I'd be looking to be a buyer. The only question is, do you buy it now or do you wait for a deeper sell-off? But it's an interesting one. I think we've got lots of support running from 155 to 170 on BT. It's just whether you waited for a deeper sell-off, I think, on that one. But it does look, looking at that really big picture chart, that it has had quite a massive turnaround so far this year from a technical and a trend point of view. So it is an interesting one, but perhaps for me, I'd rather wait to see if we get a decent dip to be a buyer. Let's see what happens. Coursera, hang on a second, never heard of it. Coursera, what do they do? An American massive open online course provider, blah, 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 okay. I think, again, we've not exactly got a lot of data to go on, have we? So I'm guessing they only came to the market in March of this year. I suppose if I had to do something, I'd be a buyer and I'd put my stop loss under 32.50. But for me, if I really wanted to buy a stock today, I could probably find a better looking chart with a better trend and everything else to buy. But I suppose it's interesting. It's all got to start somewhere. But when we only have 3 months or so worth of data, I think it's always a bit tricky. But if I had to buy it today, I put my stop the other side of that low from May, and if it broke below there, I'd get out. So we'll see. Natural gas. Let's have a look at natural gas. Pretty volatile week for natural gas. I think I've still got a natural gas trade open. You can see it there. It's been a big winner, natural gas. I mean, for me, the trend is still up on natural gas. So I've got the trade open on this account with a stop in at 340, I think. For me, I'd still be a buyer on dips. I think it's only if it goes below 340 does it look like that trend is over. It's pretty interesting. I mean, it's a pretty volatile market, as I often say. It's trading now at its best levels in about 2.5 years. And will it go higher? I think if it breaks 3.8, 380, we could see it break through 4 natural gas. But for me, I would definitely still be looking for opportunities to buy because the trend since April is up. So that would be my trade on natural gas. How's copper looking? I think copper, the trend is still up in copper. It's just struggled a bit. There we go. There's copper. So that trend in copper back to last March is still definitely up. It's been correcting, in my opinion, since May. So for me, if I had to do a trade, I'd be a buyer. The closest I'd have my stop, probably the other side of 4 at the moment on copper. But you can see it's been a pretty boring month or so. But perhaps we'll see it perk up and get a bit more interesting next week. But nothing that's happened in the last few weeks, last few months, has changed that longer-term trend for copper. So let's see what happens. But for me, still positive. Do you follow Wyckoff? No, I don't. Apple is breaking out. Let's have a look at Apple. So Apple stock. Let's have a look. Yeah. Oh, it's not quite breaking out on the daily chart. We've got the highs up at 145. Interesting one to watch next week, though. Apple 145 is the high. Is it going to break next week and move out to fresh all-time highs? Let's see what happens. Let's come back to it in next Friday's session. Can we have a look at Vanekta Oil Services Etf? Vanekta Oil Services. There we go. Let's have a look at that. So blah blah blah. Fund seeks to replicate the price and yield performance of the Market Vector's US listed oil services 25 index. Let's have a look. And to me, the trend is up for me, for my money. Not surprising, I suppose, given what's going on in the oil market. It's almost come right bang onto the trend line. So for me, if I had to do anything today, I'd be a buyer. The closest I'd have my stop loss would be 200, the other side of 200. I might actually give it a bit more wiggle room than that. But for me, that trend is still up, and I'll be looking to see if we get a run back up to 240. If it got knocked back towards like 180, 170, I think it still looks interesting. But interesting that it's come back to that trend line and we've moved away. So that's an interesting one to look at. Dollar Canada. I think I did a trade on Dollar Canada last week. Did it get stopped out? I think it did, actually. I think I went short Canadian dollar in last week's live stream and it got stopped out. I think we've seen perhaps a bit of a reversal in Canadian dollar. Here we go. Yeah. So for me, I would now completely reverse my opinion on dollar, Canadian dollar. So the market had been in a downtrend since March of last year. Broke out that trend line, and I went short last week, which would have been the second, about here. I think it was in profit for a bit, thinking it was just going to go plop back into here. But it's reversed. So for me, I would be looking to be a buyer on dips now for dollar against the Canadian dollar. Perhaps this is the start of a much bigger recovery, dollar, Canadian dollar. I'd rather wait for a bit of a sell-off from where we are now. Let's take a look on the hourly chart, see what it looks like over the last month or so. But it's interesting it's an interesting turnaround. So for me, the trend for the last month has looked something like that. So we're quite overextended at the moment, in my opinion, from that trend. So let's see if we get a bit of a sell-off back towards 123.50. But for me, be looking to buy the dips now. So completely change my opinion on that, which is very important in trading. Of course, you need to have an open mind and recognise when you're wrong and perhaps go the other way. Yeah, we looked at the DAX. We looked at the DAX when we looked at the stock market indices. Coinbase. What's Coinbase doing? Clearly, I mean, it's well off where it was from its IPO. So on the day of the IPO, it touched 400 and something, didn't it? 428. And again, I suppose if you really wanted to bottom fish, we have at least seen some stability in the price since May. So we're 2 months now where the price has held above $200. So if you wanted to be a bottom fisher here, buying with a stop the other side of 200 is what I would do if I had to do something. Other than technical analysis on charts, do you do any stock valuations, e.g. discounted cash flow before buying a stock? No, all technical. Even the investment stuff I've got, like ISAs and stuff like that, I've got stuff like Sainsbury's, UK supermarket stock in my ISA. And obviously I know it's fundamentals, I know it's a supermarket. But for me, it's the trend. The trend is up. I'm trying to think what else I've got in there. United Utilities is another stock I've got, which is we don't actually cover that one, which is utilities company, National Grid. So for me, the point I'm trying to make here is even longer term stuff that I've got. It's a bit boring, National Grid, isn't it? But even the longer term stuff I've got is in there because of the trend. So I'm not saying that it's that looking at discounted cash flows for companies can't make you money. I'm just saying for me, I don't do it. I still look at the technicals and the trend. We looked at gold, oil and gas, so you can watch the recording later and see that. What's a good strategy to move your stops once the trade becomes profitable? I think it's a really good question, actually, and one I do cover in my trading course in some detail. But I think as a general rule of thumb, let's look at the Nasdaq, for example. Let's look at the Nasdaq. That's a good one to use. I think as I often say, one of the main reasons, that's the wrong Nasdaq, people lose money is they snatch at profits. Okay, they're too quick to take a profit. So the Nasdaq at the moment, if I look at the trade I did in yesterday's video on the Nasdaq that you can watch on our channel. So I bought the Nasdaq at 14,600. That trade is up about 130 points profit. I'm up £140 on the trade. And I might be tempted, if the Nasdaq sells off in the next half hour, to panic and come out of the trade, which is completely the wrong thing to do. Because if I risked £250, my stop loss when I opened up this trade was £250 away. There we go. So there's my trade on the Nasdaq. I bought yesterday here on the video. I'd be silly to snatch at the profit. So I would say my guidance would be, don't be in a hurry to move your stop loss. Have a bit of patience and let the market go in your favour. Because, of course, lots of people trade without stop losses anyway, which is completely ridiculous. Which, again, me saying it's ridiculous might be an opinion that a lot of people disagree with. But let's not forget, 75% of people are losing traders. So you have to do the opposite of what most people do. And what most people do, move their stops too quickly, snatch at profits. You need to give the market time to move in your favour. Enquest. Let's have a look at Enquest. ENQU. There we go. What do they do? International Oil and Gas Company. Okay, let's have a look at those. Let's have a look on the daily chart. It's a bit of an odd one more recently, isn't it? I mean, it was a good trend from November into March. It's perhaps struggled a bit recently. I'd probably still be a buyer. I'd rather be a buyer on a dip, though. I think I would say the trend is still up, isn't it? So the trend is still up. So if I was in it, I'd stick with it. If I was a buyer now, where would my stop loss go? And this, for me, is the most important thing. If I'm going to do a trade or an investment now, where do I get out if I'm wrong? And for me, I'd probably still want to be down here, about 180, which is a long way away from where the price is trading now. So for me, I think the trend is still up. I'd rather be a buyer on a dip, though. So the risk is if it runs away, runs upwards, I'd miss out on it, and that's life, isn't it? If it's sold off, I'd like to be a buyer, sort of near 220. But the trend is up, so for me, I'd expect it to move a bit higher. What was the question? Where's that question gone? What do you think about Alu Mask Group? Let me have a look at that one. Alu Mask. I don't think we've got that. We haven't got that one, so I'm not sure. Can we have a look at SM Energy? SM Energy. SM Energy. There we go. That looks a good one, doesn't it? Who's that? What do they do? US Petroleum and Gas Company. Okay. Nice trend. Great trend. Off the November lows. Multi-year highs. Again, obviously, or I'd say obviously, I'm guessing, getting lifted by the price of oil. But a lovely trend. I mean, this sort of setup here from the middle of June is exactly the sort of thing I look for, where the market's pushed out to a high, has come back, and off we go again. So for me, if I was a buyer today, the closest to have my stop would be the other side of $20. So for me, that trend is still up. Only if it broke below 20 would I worry that the trend was coming to an end. Let me just do the contact details again. We're in the last 15 minutes of today. So to find out more about Capital, go to the website, Capital.com. To find out more about me and my trading course, go to davidjonestrading.com. Any questions after today, drop me an email, david.jones@capital.com. And Twitter, follow me on Twitter, @JonesTheMarkets. Follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get back into it. What derivatives do you trade mostly in your personal account? If you mean, I trade the sort of derivatives that we do, if you mean the type of derivative, I do contracts for difference and spread betting in my own account. If you mean markets, the stuff that we look at, so S&P, Nasdaq have been good markets for me in the last few weeks. Oil, I've got a trade on the euro at the moment, but also things that we don't look at that often. So platinum, T-bonds, copper. We did look at copper today. Natural gas. So there are a whole load of different markets I look at that we don't look at on the channel so often, because whenever we do a video on them, it's not that popular. So that I trade other stuff outside of the stuff we look at fairly regularly, if that makes sense. But clearly, for me as somebody who is a trend follower, stock markets have been a great market all this year. I said I've got a trade on the S&P. I bought the S&P in my own account. I think it was I wouldn't say an obvious trade to do yesterday, but it was pretty logical that the market was coming off all-time highs from Wednesday. I bought in about 1 o'clock yesterday, flukily ended up being the low, and I'm still in the trade. So I even though I look at maybe 30, 40 different markets, I think even if you just focus on a handful of markets that are moving and are trending, there are opportunities out there. So that's what I do, and I do it exactly in terms of the products I use, exactly the same products, of course, that Capital offer. Spread bets and contracts for difference. Oil and gold, we looked at those. Walgreens. Okay, let's have a look at that. US stock Walgreens. I should mention, of course, you've reminded me, we do have a US stock channel. So if you look in the description of this video, we launched a US stock channel a few weeks ago, and we put 3 videos a week for US stocks. So if you're subscribed to our channel here, if you click on that description in the video after this, you can subscribe to our US stocks channel, and we look at Apple, Tesla, Microsoft, the usual popular stuff. So anyway, Walgreens, are they? What are they? They're a retailer, aren't they? I would be a bit worried that the trend for Walgreens was over, or the trend that we're looking at here since the October lows in Walgreens. It's quite interesting, isn't it? It has quite the swings, Walgreens. I suppose if I was going to do an aggressive trade here, I'd give it one last chance of going up. So I wouldn't buy it today. I might buy on Monday. Assuming today it holds above $46, I think it could be an interesting trade for Monday, that one, because 46 has been such a floor in Walgreens over the last, pretty much for most of this year. So I think it's interesting here, and maybe it would be one I could be tempted to be a buyer on Monday with a stop the other side of 46. Let's come back to it. Let's come back to it in next week's session, next Friday, and see what it does. I think if it starts breaking below 46, it looks like it could be in trouble. But let's see what happens. Euro yen. Let's have a look at euro Japanese yen. Because that trend, I would still be a buyer. I would still be. It had that great trend, didn't it? That it's just started struggling with. So that trend goes back to May of last year. And it's had a couple of little breaks. I would give it one last chance to go up. So I'd be a buyer either today or Monday. And I'd put my stop loss probably the other side of these lows. It's quite interesting, actually, that the market has held above these old lows from April, 129.50. And even yesterday, when it got knocked yesterday, it held. So for me, should we do that trade? We haven't done a trade today, have we? Let's do that. Let's do that trade on euro yen. So I normally risk 100 quid on these trades. So we want to buy. Do you want to buy 400,000? 400,000 euro yen. 1/3 where it is now with a stop loss. I haven't put my stop loss in. Where do I put my stop loss? Oh, my stop loss is going to go at, say, 129. So I'm going to have to close my size down. Yes, that's far too much. I thought it seemed like a big trade. So if I do 8,000, a bit more sensible, 8,000, buying 8,000 euro yen now. And it's really, I'm just looking to see if this level holds. And I'm putting a stop the other side of it at 129. And my risk is 96 quid, because we normally risk 100 quid on these live stream trades. Let's buy that and see how that works out. We'll come back to it next week and see how that's worked out. Perhaps the better trade, because we've seen such a big move today, would be to be patient and see if you get a bit of weakness on Monday. But I think it's interesting, that 129.50 level in euro yen. Majestic silver. Let's have a look at Majestic silver. I'm guessing it's going to be boring because the market's been a bit boring, yeah. But I suppose, I remember we've looked at this when we look at silver stocks videos, which we haven't done for a while. That trend for the last year is still up. So if I had to do anything, I'd be a buyer because we're bang on the trend line. The price is oversold on the 10-day RSI. I'll be a buyer down here. Interesting one, that, even though silver is the most boring market in the world. It's interesting, that one, coming back to that longer term trend. So yeah, let's come back to it over the course of the next couple of weeks and see how it works out. Oil, we looked at oil, blah, blah, blah. What's the most you've lost on a trade? I can't remember. I mean, I've got a very, what's the word I'm looking for? Methodical form of trading. So my risk on a trade is the same for every trade. Because why wouldn't it be? You shouldn't. I don't risk more on a trade than I would on another trade. So for me, if my risk is X and the trade goes wrong, then I lose X. So I've never bought Bitcoin at 60,000, bought 2 Bitcoin and YOLO'd it all the way down to 30,000. So I don't have any exciting stories of losing my house on a trade, unfortunately. That's for gamblers. Have you looked at future FTSE 250 media? I think we have. I don't know then. Maybe not for a while. It's publishing companies. I seem to remember the trend has been great, but all it's coming up for now is Brent crude oil futures, which isn't what I want, is it? I don't think we cover it. Let me have a quick look. I don't know why we don't cover that. Is it future publishing? Let me have a quick look. No, I'm just looking on my charting platform. Let me just put in the code FUTR. Future PLC. Oh, it comes up there. I mean, it looks good. Let me see if I can get it up here. FUTR. Future PLC. No, we don't have the data. Here we go. Let's drag it over on this one. So the last 12 months or so have been pretty good, isn't it? The price has gone from 6. Is that 6p or 6 quid? Whatever it is. It's gone up 5-fold. So the trend looks pretty good. Actually absolutely fell off a cliff back here. .com burst, isn't it? So for me, it's an interesting one to look at. We don't cover it on our platform yet. I suppose the question is ever, do you wait for a deeper sellback or would you be a buyer now? I mean, the trend is definitely up. So for me, it's just I'd probably be tempted to wait for a deeper sell-off so I can have a more sensible stop loss, but you can't deny the trend on that one. What's the difference between a CFD and spread betting? If you have a look on our website, it'll tell you, but in a nutshell, they're pretty much the same. Spread betting is available to UK and Ireland clients, and spread betting profits are tax-free because it's wrapped up in a thing called a bet. That's the only difference, and your profits are tax-free. The downside is, of course, your losses aren't tax-free, but with CFDs, you're subject to the same taxation rules as if you'd made money trading shares. So CFDs are subject to capital gains tax, but of course you do in the UK anyway have an allowance first of all, but spread betting it's all tax-free. So that's the major headline difference between CFDs and spread betting. But if you look on our website, Capital.com, you'll see that. Canadian Solar. We don't cover that one, Canadian Solar, by the looks of it. We're getting lots of new ones coming in today, but I think they might be just a bit too small for us to cover. CCIV. Churchill Capital, is that one? This sounds an incredibly vague description. Is this one of these new SPAC companies that have been set up? I mean, again, I suppose we've got very limited data going back to March. If I had to do anything, I'd be a buyer, but I put my stop loss the other side of 22 on that one. Methodical. Thank you, George. This is the word I couldn't get out. Do you trade options? Yes, I do trade options, but I sell them rather than buy them, which is very high risk because if it goes wrong, it can blow up in your face. And of course, the downside of buying options, if you Google option time decay, if you as a pure directional play, if the market doesn't move quick enough, you can be right on the direction of a market, but still lose money. So for me, for directional stuff, not just because I work for Capital, I use CFDs and spread bets. I don't use options for directional plays. Carnival Group. Let's have a look at those. That's the Carnival Cruise, isn't it? Oh, I wonder if I've got a weird setting today, because that should be coming up, because they're a US stock. I don't know why that's coming up. Sorry, can't look at those. Carnival Corp. Please check CrowdStrike, the old favourite, CrowdStrike. What has it done? CrowdStrike, yet again, the trend has continued in CrowdStrike. What do they do? I can't even remember. Security solutions, that's it. So we've looked at that a few times, thanks to Nick on the live streams. So broke out this week. Is that fresh all-time highs? Maybe. This week. Trend is still up. As usual, the only question is when stuff breaks out, do you buy the breakout or do you wait for a dip? But, unarguably strong, that one, CrowdStrike. Euro dollar, we looked at US dollar. 10-year bonds, we don't cover bonds. We cover the TLT. I do have a trade on my own trades in T-bonds, treasury bonds. It's my biggest winner at the moment. So TLT is a 20-year treasury bond ETF. I really don't understand bond markets. It is just a chart to me, but I'm long. I'm long TLT actually as well. So for me, it's had a big run over, relatively speaking, over the last 6 weeks or so. For me, I think it's interesting what's happened with this one, the 20-year bond ETF. I do wonder, have we broken out of the downtrend in the 20-year bond? So I'm long already. And for me, if it drifts back, I'd still be looking to be a buyer. So I think bonds could be an interesting market for the rest of the year. So we'll see. We'll see what's happening. And I think we're going to nearly wrap it up. What is your opinion in investing bigger money on lower price instead of setting stop losses for larger cap stock. If you're saying, should you trade without stop losses in a roundabout way? Absolutely not. For me, and investing bigger money in lower price. If you're saying buying lots because something's fallen a lot, well, okay, yeah, maybe. But the problem is, of course, just because you're buying because something's fallen and you're going to put more money in, that doesn't mean that it hasn't hit the bottom. I'm trying to think of a stock that hasn't done very well. AT&T, for example, is a stock, big stock over the years, hasn't done very well. If you'd have been buying that all the way down but putting more money in, you might have ended up buying it at 44 and you're sitting in it now at 28. So for me, I always have a stop loss in, whether I'm a trader or an investor, whether it's a large cap or a currency. When I get in, I always know where I want to get out. And I do think just to remind everybody, 75% of people lose. One of the main reasons people lose, they might have some small winners and they'll hang on to something, like Bitcoin, for example, that halves in price, and it completely wipes out a whole string of winning trades. So I think if you're going to be sensible about trading, one of these sensible things to do is be professional and accept you're going to have losing trades and have stop losses. So that's my thoughts on that. Okay, TLT, 20-year Treasury bond. We looked at. You keep asking about oil. We did look at oil. We looked at oil about 15 minutes in, 20 minutes in. So if you go back and watch the recording, you'll see oil. But for me, the trend is still up in oil. So I'd still be looking to be a buyer on dips in oil. That's it. We're going to wrap things up there. Thanks for coming along. Don't forget, Capital.com to find out more about the trading platform. DavidJonesTrading.com, more about me and the trading course that I've done. Any questions, david.jones@capital.com. Follow me on Twitter. I'm at Jones the Markets on Twitter. And follow Capital.com on YouTube, Twitter, and Facebook. Don't forget, we have launched this stocks channel. So looking for some more medium-term stuff. The description or the link is in the description on this one. You can watch the recording of this thing now as soon as I end it. So if there's anything you missed out on, you can have a look at oil and everything else. Thanks for the kind words at the end. I do enjoy doing these, and we do look at some different markets. We sort of rattle through the stuff, but I think it's always interesting to take a look at stuff. And we'll do it all again next week. If you're watching on YouTube, if you haven't subscribed to our channel, if you could subscribe, that would be great. We'll wrap things up there. Have a good weekend. Let's see if it is really coming home on Sunday, and we'll do it all again next Friday.